Hey, good morning, everyone. This is Vance Williams out of Seattle, Washington, here in the U.S. Welcome to my morning Forex trading show. It's Thursday, August 28th. I did start the show a bit later today because how we post and provide shows, we did some coding updates on our website, and it was a little confusing. But anyway, here we are, and here we go. Quick announcement, after 6 weeks, we're accepting new members into my training program. We're accepting 15. If you're interested in learning more about that, just hold on to the end of the show and I'll give you some details on that. Basically, the story today is the end of summer, the end of the week, the end of the month. Hey, good morning, everyone. This is Vance Williams out of Seattle. Hang on just a second. I have welcome to my morning Forex trading show. Sorry about that, guys. I had the broadcast actually playing in the background on another web page. Anyway, getting back to what I was saying, end of summer, end of the week, end of the month. It's like the end times, but it's a good thing. It's the end of the summer. So one of the most important things that you have to do is learn to recognize when conditions are not great, when the risk is higher. Uncertainty creates more risk. And in addition to that, the past few weeks we've seen some of the lowest volatility all year. So most of this is just summertime here in the U.S. Some of it's uncertainty created by central bank statements. And this week they're just quiet. There's a little rumblings. Basically, the president over in Germany is saying he doesn't agree with so and so, but nothing really significant. But something is going to break. It's like the sun. We don't know for sure if the sun will rise tomorrow, but it always has in the past. So that's my story about volatility. It will be here. So my advice is just be patient. We have Labor Day weekend coming up here in the United States. That's always kind of the big marker for the end of summer. People put away their boats here in Seattle. So my suggestion, take time off and relax. Get ready for things to start happening come Tuesday morning. And I will do a show. I fully intend on doing a show Tuesday morning to kick off the new quarter. But as I start to talk about price here, I want to remind everyone that what I do on this show is intended for your educational purposes only. All right, so let me bring up a screen for you so we can see price. All right, you should be able to see my screen now. Now, typically, this is the Euro 30-minute chart, and you can see how I've described this in the past. When price was in this range, I said, hey, when it closes down under 130, 185, look for a push, pull back in a second push, look for a trade in this area, and there it was right there. As it came back in here, it struggled, and I could extend this over, but it struggled right in this area. Hit this top here, this other key level, essentially 13200. But watch what happens when it just has trouble closing above this level here. Then it does make a second push, and then you get all this chopping around and back down under the range again. And so the reason why I've got a gray spot on there is just to point out to you that this is what uncertainty does. It changes the behavior. Guys, the only way you can anticipate what people will do is by understanding how they've behaved in the past. It's no different from a close friend of yours. You can anticipate what they're likely to do in any situation because you know them. You know how they've behaved in the past. And so, when there's a lot of uncertainty coming here at the end of the week, the end of the month, the end of the summer, how are people going to close out their books with no information from the central banks here at the end of the week and the end of the month? There's a lot of uncertainty. So they're gonna err on the side of caution, which is probably positive for the U.S. dollar, as you can see that coming in here. The reason why it's positive for the U.S. dollar is because when uncertainty increases, people tend to pull their money out of higher risk investments and move it into more conservative investments, and part of that is dollar reserves. And so, basically, I think that's just why they drop down in here. But the bottom line is, just sometimes it's not a great time to trade. And if you have really good technical training, the movement that you learn on the charts will tell you, you know what, this is off. This is not the way this moves. And let me give you an example of that. Let's drop down to the 5-minute chart. You know, maybe I should get rid of that big gray dot on the screen. See if I can. Well, there's more than one way to skin a cat. I'll find it down here. Ellipse. Delete. Okay. So what I'm going to do is I'm going to drop down to the 5-minute and show you how what we look for would have kept us from getting involved in this trade. I mean, first of all, there was some high impact data right in here, it looks like. But that aside, going over here, as it came into the barrier, let's see what we had here. It comes into the barrier. We would have been looking for a 30-minute candle to resolve over that line. People say, well, what's the magic of a 30-minute candle? There's no magic about it. It's just that, and this is a really good thing to know. We talked about this in our live trading room. If there's sell orders sitting up here, which there most likely are because it's such a strong barrier, in a 30-minute period, if the buyers can close it up in this area, you know, above a key level that I always talk about, if they can close it up there, it demonstrates to us that there's probably more buy orders than sell orders. And so that's one of the things that we teach in the program. But one of the things I want you to notice here is this 5 minutes right here, that's a 2100, that's the start time of the candle. So we don't actually know if that closes above the key level in 30 minutes all the way until basically this candle, which it doesn't. You can see if you look at my crosshairs, this is the end of the 30-minute candle. I'm looking at a 5-minute chart right now. So it closes under. Then it takes off with a small move. So what we actually see here is a move that goes up like this, comes down, retraces, and pushes up. This is the behavior we look for, but it doesn't happen in conjunction with the 30-minute candle closing above this key level. So you just don't want to stick your neck out up here. It's just too easy for this to just fire right down 100%. So my point there was, if you really know how to read charts very well, you don't have to know about any of the uncertainty in the world and what central banks are talking about. The behavior itself will tell you, you know what, there's something different going on right now. And so that'll keep you out of a lot of trouble. So it's just a mess after that. Popping over to the pound, look at this. This was our key level, and look how strong it was. I'm going to zoom out a little bit. Look at how strong this level was. Price gets up, goes back under. You can't really see that, so let me zoom in. Price gets above, fires all the way back down in that 30 minutes, closes above, makes another move, gets back down under, and stays there for the next day. Just barely gets above, closes back under. Again, our techniques would keep us out of a false breakout. And I think Victor wrote a post about that this morning at forexartofwar.com. And then here's the same thing. We end up with a new key level right in this area. Price goes up, it goes down. Let's see if what we know or what we do would have kept us out of a losing trade right here. I haven't actually even looked at this morning. Okay, so here's what we'd have been looking at. We'd have been looking at a move here. Here's a push, pull back, second push. Here's another new wave that starts here. Goes there. Let's see. What we'd be looking for is a minimum of 15 pips out of the key level. That's only 11. So, yeah, we wouldn't have taken that trade. So, again, the point is that, even if you don't know anything about the market conditions, if you have good trading techniques where you're looking for a specific type of behavior that repeats when market conditions are good, when you see that behavior is off, then you know not to trade. I did see something over here on the Australian dollar. This was, what time of the day was this? This was in later Asian session. There was a move here, the Australian dollar, and it was, let's see how many pips it moved, about 37 pips of strength, pulls back, pushes again. So there was a trade right there yesterday. Not too many people saw that. And part of that is not too many of our traders trade the Asian session. We tend to stick where, the liquidities there, with the euro, the pound, and the dollar, which is 70% of all the liquidity. And most of that movement happens between 3 a.m. and 11 a.m. Eastern. Now, if you're a new Forex trader, this stuff is actually simpler than you can possibly imagine. People spend like 3 to 5 years learning everything under the sun about Forex trading, and they still have trouble making it work. But if you learn the right things, you only really need about 3 months of education. I mean, really 1 month of education, and I'm talking a couple hours a day. At that point, you really know enough to make consistent profit. The key is really training yourself to execute well and to fine-tune what you're seeing. So I'll probably do another show and go into more detail on that later. So at the beginning of the call, I had an announcement about our training program. Very simple. It's been 6 weeks since we opened it up to anyone. We're opening it up today. It will be at that special price of $99 per month, no long-term obligation. You can quit anytime you like, stay as long as you like. But my training helps you master high-probability trading, high-risk execution, and we address the important issues related to trading psychology. So this offer, by the way, includes personal coaching by me. I personally follow everything you do, and you know, at that low price, this will probably be the last time that I do that. So if you're interested, be sure to write to me at Vance at forexartofwar.com. Vance at forexartofwar.com. You can go to my website. You can search my name. You'll find me. I'm not hard to find. So just write to me if you're interested. I always like to speak to people before you make a decision to sign up in the program. Make sure it's a good fit. I guess on a final note, I truly believe this is an exciting time for currency traders that's coming up ahead of us. I don't throw that kind of statement out very often. I don't make money because people come to watch me talk about the news. Those guys talk about the news because they're selling advertisements. I'm not making my money selling advertisements. So I don't talk about, you know, things, you know, that provoke fear, all this terrible things happening in the world to get you to come and read the news. I don't, you know, throw out exciting things to get you to come and read the news. So when I say I think we have truly exciting times ahead, that's something I don't usually say, and it's something I truly believe. We are on the cusp here of a currency revolution in the world, and I believe that those of you who have these skills to trade currency are going to be in an incredible position to take advantage of all that. So thank you for joining us today. To all of our members, I'll be getting together with you guys coming up in a few minutes here. Cheers, everyone.